Welcome to Real Estate Success Partner. We're your hosts, Devin Dubuque,
David Wynn.
and we're here to talk about how to have great success in any market. Today, we've got a special guest. Wait, we don't have a guest. What's going on, David?
No guest today, Devin.
Yeah,
no
you know
guest.
what? We decided we want to talk to you guys about something that's going on right now. Been the elephant in the room. We've covered it on other podcasts, but we felt like it's a good time to really sit down and talk to our followers about what's going on with the market, right? State of the market.
Yeah. Let's talk about that. I'm sure we're all feeling it in our pocketbooks. Inflation is at an all-time high.
It is.
Interest rates is at an all-time high.
They are.
Everything.
Well, not an all-time high, right?
Sure.
Interest rates are back to where they've been
Normal
more
market,
stable, right?
But not in the last couple of years.
But not not what we're used to have seen recently.
Right.
Yeah.
Right. No, you're feeling the pinch at the grocery store. You're feeling the pinch at the gas station. You're feeling the pinch everywhere. Hey, how come no one discussed, we went to sleep the other night and we woke up and gasoline was 30 cents more a gallon overnight?
Yeah.
How come no one said that?
I was wondering why it cost so much more to fill up my truck yesterday.
Yeah. Or how about a month ago, eggs by the carton went up by like $4.
Yeah.
Why are these things going through the roof? I don't understand.
Yeah.
Devin, tell me.
Well, there's some crazy stuff that's going on out there, and the market itself has gone in a direction that people just don't understand. But I think it's easy to not understand because it's not a normal market, right? I think we go back to the last couple of years, and what COVID's created is kind of a strange economy that nobody really understood or how we got here, right? And I believe what we've been hearing a lot of is that I think it created a false inflation. Traditionally homes they appreciate what 2 to 5% a year. Is that
traditionally year over year?
2 to 5% a year, right? And what do we see happening? In 2020, 2021, 2022?
10 to 20%.
10 to 20%.
20% in some markets. That's crazy.
20% in some markets.
Year over year in 1 year.
And so, that can't happen, right? Because what happens if we continue to increase 20% every year? Well, eventually nobody can buy a home, right?
Right.
Every home's $1 million home, right? And $1 million homes are $10 million homes. And it's happening overnight. It's not happening in a escalated period of time. It isn't escalated. It's immediate. We're seeing it happen immediately. So the home values go up. We're all at home for 2 years, right? And we can't go on vacations. The government's flooding the market with money, right?
Yep.
And giving people a false sense of income, right?
Yeah.
So everybody's savings goes up, and all of a sudden, hey, we can go back outside again. Right. And it's a new day and our houses are worth more money and we're feeling pretty strong because we got all this cash in the bank. Right. Yep. So what do we start doing?
Spending.
We start spending. And what happens is for the last 2 years, nobody could make anything. So we're trying to buy product that doesn't exist.
Yep.
And everybody's willing to pay more.
Oh, yeah.
Everybody's willing to pay more. And not just for the mortgage, for the eggs, for the computer chips in cars, right?
Yep.
Did you know anybody right now that's recently purchased a vehicle and accepted that they weren't able to utilize their navigation, their backup camera, their sunroof because the chips don't exist?
Yeah.
But did they still pay over to buy that truck?
Oh, yeah.
100%. It's happening, right? So we've got this false sense of, man, we've got all this extra money to spend, so let's spend it. And we've got a limitation on products that are available. And so we all start spending to outbid the next guy because we want to win. We want to get what we want, right? You're not going to take what we want. We want what we want.
Right.
And so we inflate the economy.
Yeah.
Yeah. And so here we are. And, look, at the end of the day, I'm not going to get political on people here, but we've got somebody new in office and, trying to, make the right decisions, I'm not the one to answer that question, right? But at the end of the day, it's, well, how do we control this? How do we make sure that we don't have a full-on recession, right? And, so now all of a sudden, hey, let's raise rates.
Yep.
Right? Take them back to what would normally be considered a normal rate level. Mm-hmm. They don't feel normal because we were getting 2.75 and 3.25.
Yep.
And now all of a sudden, it's just put a complete screeching halt to a lot of people from, do I buy? Do I not buy? What do I do? Well, and what's happening?
Well, let's talk about that. So the people that don't know, what, the media always talks about the Fed's meeting, the Fed's meeting. So unless you're in this market, why is it when the Feds meet and they say, hey, we're going to increase interest rates by a quarter or a half a point or whatever? Why is it not correlation to mortgage rates? Because interest rates has to do with everything from mortgage interest rates to your credit card interest rates to your auto interest rates to everything that's involved. Okay?
Absolutely.
So, a lot of people, what they don't know is mortgage interest rates is based on the 10-year treasury bond. That's what regulates it more than anything else. But the Feds, the reason why they keep raising interest rates is to try to curve the inflation part.
That's
so
it.
Guess what? The higher the interest rate go, they want you to stop buying. That's what they're trying to do.
That's right.
They're trying to slow down the American people from buying products and services. That's their way.
But not just mortgages, right?
Everything.
Because what do we have to do if things keep going up in value? Right. And eventually nobody can afford anything. Right.
Right.
And really you can put whatever price tag on something that you want and everybody's just in a bidding war to get it. That doesn't work. That's not an economy that's sustainable. Right. So we cap out the interest rates. We raise them up to a point where we say, hey, it's kind of slowed things down. People have stopped buying. You're not getting the bidding wars on homes. So the houses aren't inflating 20% in a year. You're back to, actually seeing some deflation to property values. So some of those folks that got in and thought, man, I got this great 2.75 and 3 1/4, they overpaid for that house because now it's not quite worth what it was a few years ago. But when does this stop? I guess that's the big question, right? A lot of people go, well, I'm going to sit on the sidelines and I'm going to wait until the rates get better. When's that stopping point and how is that dictated, right? Is it happening tomorrow, next year, 3 years from now? Never, right? What's happening, David?
Let's talk about that. So right now, inflation is at 6%. For us to be in what we call a controlled market, we're trying to get inflation down to 2%. Okay, that's what the Feds are doing to try to increase interest rates to drive inflation down to 2%.
That's right.
So there's two parts to this to where rates will start coming down. One is to control inflation from 6% down to 2%. That's the first part. The second part, and no one wants to hear this, is 2 million people needs to lose their jobs.
Yeah.
The job market. It's as sad as it is.
And that's not our decision.
No, this is a direct correlation to interest rates. I'll repeat myself. 2 million people have to lose their jobs for interest rates to drop.
And 50% of those people need to come from the mortgage industry because there was an artificial inflation and more people flooded into that market. So they're trying to return the mortgage professionals back to what's actually closer to what they were pre-2000, right, before COVID happened. And what happened in Texas this year?
What do you mean?
40% of the mortgage loan originators didn't renew their license.
So we have 40% less loan officers in the state of Texas. That's just Texas.
That's just Texas. Other states are close behind, not far behind. But Texas alone, 40% of the originators didn't renew their license. So the control that the government's trying to do here to get inflation back to a reasonable number, right?
Yep.
It's working, right? It's working. So love it, hate it. Don't agree with it. Don't agree what's happening. It's what's happening, and it is starting to make some transitional changes.
It is taking effect. The Fed's control or the Fed's hikes are doing what it's supposed to be doing.
That's it. That's exactly right. So, I actually heard somebody speak, a couple of weeks ago, and one of the things they talked about too was that accumulated savings. We all had this really high level of accumulated savings, which is what stimulated everybody to go out and start spending. And I don't recall what the exact number was. We're talking about hundreds of millions of dollars, and the government wants to see that drops. Right? They want to see that we get down to a certain level of savings, which means they want you to spend your money. They want you to take your savings and spend that savings. They want you to keep spending so that eventually you run out of money. And what happens now? Well, you can't buy anything, and that's what's going to bring inflation down. And to be honest with you, I can't remember how many $100 million it was, but just over the last 6 to 7 months, they've already compressed that. We've gone through that savings. We've blown through that savings as a country. As a country, we've blown through hundreds of millions of dollars, right? And at the end of the day, when they get that to the level they want it to be at, along with the jobless, right, the job reports, they want those where they've got them, they get inflation to where it is. That's when you're going to start to see some sort of decompression of the interest rates, right? And at the end of the day, right, when does that happen? What's the expectation there?
They're saying 3 to 6 months, Devin. Possibly Q3, Q4.
Possibly.
Again,
maybe even first quarter of next year.
Yeah. So the prediction is, and the hopes, guys, is for rates to hit possibly the 5s for the summer markets. That's a hope and a dream right now.
Yeah. That's right. That's right. So, at the end of the day, you've got a lot of people sitting on the sidelines. They're hoping for this to happen. And let's be honest, that may not happen. We may not see rates
No.
decompress. Even if they do decompress, I think best case scenario, what people are expecting, and again, this is a guesstimate, right? But I think the best case scenario is what, 4.5 is what.
Yeah, but they're taking maybe that's the best, and we may not even hit the fours till 2024, Devin.
Exactly.
So at the end of the day, here's the thing, it's hope. It's I have hundreds of clients that bought
Right.
houses last year.
Yeah.
That I'm in full contact with, and guess what? We talk constantly. We're looking at the market. We're evaluating, and as soon as the market drops to the fives, which I call that the first wave of refinance, because there's going to be another wave. They say,
There will. Yeah.
if they want to take advantage of that first wave, then I got hundreds of clients that signed up at 6.5 and 7 last year that we're going to refinance in the fives.
That's
and guess what? They may refinance again in another year if it hits the fours. So the great part about refinancing is you can do it as many times as you want, because at the end of the day,
we'll
it's
marry the house,
amortized.
date the rate, right?
Yeah, and
Marry
it's
the house, date the rate.
It's amortized over 30 years. I mean, the savings from a half a point to a full point is tremendous on a monthly basis.
Absolutely. Well, and again, so that the question is then, okay, we don't know for sure when the market's going to correct itself. It's in the process and it's actually working. At the end of the day, we don't know if rates are going to improve or if, when, how that's going to happen. So what do you do if you're thinking about buying a house right now? Do you continue to sit on the sidelines and hope for the best? Or, do you get out there and, start looking for a home?
No,
What
no.
do you do?
It's funny. I'm having this conversation daily
Right.
with my realtors, with my borrowers that are buying, and I'll share with you the conversation I have. Hey, last year when you were buying a house, was it better to buy last year in March? Was it 24th today?
Right.
Or was it better to buy today, March 24th?
Yeah.
Guess what the answer is, Devin? Last year, March 24th, because if you bought a house then, whether it's at 6.5 or 7%, the rates are still 6.5 or 7%. But you know what the difference is?
Yeah.
You probably have $40,000 or $50,000 worth of equity, depending on what size house that is.
Sure.
So now you have instant equity in the house. Let's take it a step forward.
Right.
Is it better to buy a house now, March 24th, 2023, or wait till
Absolutely.
next March 2024?
Absolutely.
I would venture to say it's better to buy now, because inventory is there's a shortage of inventory.
There is
and
a shortage.
houses are going up. So whatever time you're buying is always the best time to buy.
Yeah. Yeah.
I mean,
well, it is, because again, once you purchase that home, you're starting off that generational wealth, right? You know, at the end of the day, homes do appreciate. 20%, that was a pipe dream. That couldn't continue to happen. 2 to 4% is going to happen every time you do it. And if you pick the house up now, and you pay a little bit more for the interest rate than you paid a year ago, you're actually going to be able to buy the house that you want because, if it's there, the market is a little drier on inventory, but you have that opportunity to get out there and pick it, because here's what happens when the rates drop. These people that are sitting on the sidelines hoping for the rates to drop, they all try to engage back into the market simultaneously, right? You've got an inventory issue, so now you're back into the line waiting process. You don't always get the house that you actually want, right? So at the end of the day, I'd say that if you want to buy the home you want, and you know that, hey, the rates may change at some point in time, let's marry the house and let's date the rate.
Absolutely.
And let's refinance when that changes, right?
Yeah. No, that's my advice to all my borrowers, all my realtors, everything else. For the rest of our audience, what can you look for in the economy to kind of gauge this? There's something else. The big elephant in the room is the banking crashes that's going on in this country.
That's right.
It's not just this country, but it's also the European countries. Swiss bank, just crashed. It's been the most reputable, stable bank for the last 100 years. So it's just not the banks in the United States. So what does that mean for the industry? Well, the feds have already came out and said, hey, here's $2 trillion to bail out the banks. The good news is they're saying the big 5 banks, your Bank of America, your Wells Fargo, your JP Morgan Chase, they don't need the money. They're stable. It's these investment banks that's out there. But here's the deal. If those banks crash, guess what happens to interest rates, Devin? They go down. Yeah. So that's something you can keep an eye on. So for our audience out there, keep an eye on the banking crash. See what the feds are doing with that. Keep an eye on inflation. As inflation drops to 2%, you're gonna also see rates down. As you see people losing their jobs and the market for job loss creeps up to 4%, you'll see rates go down. So those are the 3 factors that we want our audience to keep an eye on.
That's right.
To gauge what the rates are doing.
Yeah, that's right. But I'm going to encourage you, if you're, on the sidelines and you're thinking, hey, what do I do today? Do I wait it out and hope for a better interest rate, or do I go ahead and move forward and buy a house? If you need a house, right? If you don't need a house, you get to do what's right for you and your family, right? But if you need a home, if it's time to upgrade, you've got another person to the family, you're in an apartment and you're renting, which means that you're not creating any wealth for yourself, and you know that it's time to make that next step. Don't wait. Don't wait. Get out there and find that house before the interest rates, drop, so that you have the ability to pick what you want. And when the rates do drop, refinance it, and you're in your home. You're building equity. You're building wealth, and now you've just put yourself in a little bit better situation because the market improved. Right?
Absolutely. So I can't emphasize enough. Now is the time to buy. If you're in the market, now is the time to buy. Don't wait.
Yeah, and we did a podcast on this, several weeks ago, and now was the time to buy then, and now is still the time to buy now. The rates haven't made a lot of transitional changes since that point in time, So if you think about that, we go back, we're in March now. This was back in December, January, and we were talking about now is the time to buy, and realistically, there hasn't been a lot of change there for the consumer. So the person that bought in January, maybe they just they got in a little bit earlier. They've already had an opportunity to maybe see a little bit of benefit from equity improvement. So long story short, if you're on the sidelines, you don't know what to do, make a phone call. Make sure it's right for you. It's not it's not a situation where we're saying, hey, everybody go out and buy a house tomorrow, right? But if it's something you're in the market for and you're questioning whether now is the right time or later is the right time. If you need a home, now is the right time. You can always improve your rate if that market improvement corrects.
Yep. Man, I'm glad we had this podcast, Devin. I know it answers a lot of questions for a lot of
well, we hear it every day, right? We're consulting with consumers, we're consulting with agents. We're talking to the general public, and people ask us all the time. If you're in this industry, what do you do? And at the end of the day, this is what you do. This is what you do. So back to it. If you're not in the market, don't buy, right? But if you know that it's time to upgrade and you need to go out there and get that house, this is when you buy, right? Right now is the time to do it.
Absolutely.
Yeah. So, well, I don't know that we have a lot to talk about outside of that today. I think that was really the mission of this one was, let's make sure that we're educating and letting people know what's going on out there and what to expect over the next several months, right?
I agree.
Yeah, there we go. Well, guys, I think we're going to go ahead and wrap this one up today. So I'm Devin Dubuque.
I'm David Wynn.
And we're your real estate success partners. If you want to find us, you can check us out at realestatesuccesspartner.com. Again, that's realestatesuccesspartner.com. We also can be found on iTunes, Spotify, YouTube, all your major platforms. And we'd love it if you'd subscribe. We love the 5-star reviews. But thanks for stopping in, and look forward to catching you on the next one.
See you guys.